Market shrugs off fears of conflict escalation with Pakistan to end significantly off the day's low. Nifty holds on to 24,400. Auto, consumer durables lead the charge. FMCG, pharma and healthcare were on the other side today. Mid-caps and small caps doing much better.
Indian Defence Forces carry out precision strikes on 9 terror camps in Pakistan and Pakistan-occupied Kashmir. Pakistan confirms the strike, says 26 people were killed and dozens injured. Meanwhile, India's Foreign Secretary calls the military operations appropriate and non-escalatory. India Army says no Pakistani military establishments were targeted.
China cuts rates and frees up liquidity to fight tariff wars. This amidst reports that top US officials are set to meet their Chinese counterparts to de-escalate the trade war. Meeting is expected to happen over the weekend in Switzerland. Experts, though, don't expect a deal, a resolution to this trade war anytime soon. Hello and welcome to a fresh new edition of Markets Forward, your go-to show where we aim to get you everything you need to know as you prepare for the next trading session. I am Prashant. With me today, my colleague Vinny. Vinny, hi.
Hi Prashant, an interesting day, right? Because a lot happened overnight, from UK FTAs to a retaliatory action on Pakistan. But markets didn't do that badly. Mature move coming in.
Very well, because we ended higher, first of all, and the broader markets did extremely well. So I think, and that I think is the bigger point. The broader markets with 1.5%, 2% kind of gains, it just gives you a sense that, this is a market which kind of just wants to go higher. Maybe it will. The strikes which India carried out, of course, caused a very tentative kind of a start. And if you just look at the Nifty through the course of the day, down, then up, and then bobbing up and down through the course of the day to end about 30, 40 points high. So not very much to take away by looking at the Nifty. But I think broader markets, single stocks, etc., I think a lot of action, really. Of course, we've struck, and we just need to watch what Pakistan does next. If this is it, if there is going to be any action, we can't control it. But I think, at least in the very near term, that'll determine the course of things from here on. But all told, by 3:30, it was a very good session, a very decent session. Really no ripple effects of what happened as far as those strikes are concerned, not showing up here in the market. Vinny.
Absolutely. And, a couple of sectors that did absolutely amazingly well today was auto. Nifty auto among the top sectoral gainers. You had realty that was doing well. So, yes, keep an eye out on that. There was news flows that came in around auto that was supporting the up move. But that is something interesting. Other than that, the sectors on the flip side that were in the red today or closed in the red today were Nifty Pharma as well as the FMCG. A bit of a laggard coming in on that front. But that's how the market setup was looking like today. But we had a whole host of stocks, like we saw that in the mid and small cap, which came the outperformance came in. So we have Vivek joining in with us from the wall to get started with the show to tell us about the top stock movers in today's day.
Well, thank you so much for that, Vinny. Again, another session where the advance decline ratio was very, very strong, despite all of the overnight news flow that we did see. You did highlight, which are the sectors that did very well. Let's have a look at the individual stocks, especially the result reactions. Pyramid Enterprises, very strong result reaction that you see over there, almost 7.5% higher in this particular name. Analysts quite enthused. CLSA going ahead and upgrading this particular name. Paytm, again, despite the fact that the headline numbers indicated a significant bottom line loss, analysts were enthused by the fact that the company most likely in FY26 will turn profitable, and this is something that led to a very sharp intraday recovery. BSE was the other stock in focus, a very good set of numbers, top line growth very, very strong, volumes over there quite high, and on the back of that, BSE, one of the top gainers today, over 6.5% higher. The entire cable and wiring companies in this particular quarter have come out with a very good set of numbers. KEI Industries was no different. Again, a strong top-line beat against what the street was anticipating, over 3% higher for KEI. And MRF, in line with what most of its peers, as far as tire companies were concerned, did. MRF also saw significant margin expansion, along with the tailwinds present in terms of cooling of rubber prices. This particular stock ended high by over 4%. Remember, its very high-priced stock. On the other hand, in terms of negative stock reactions, you did see pharma continue to seeing selling pressure. Sun Pharma, one of the top laggards, regulatory environment turning quite unfavorable over there. Look at PNB, again, in line with what other PSU banks have done. PNB too reported muted growth. Stock ended recovered a little bit from the day's lowest point, but still ended in the red. Radico Khaitan, very strong set of numbers. Stocks are profit booking post that. And Mazagon Doc, remember, a whole host of defense companies today did see some profit booking after the recent rally that they have seen. Overall, good set of good day, especially in terms of the broader markets. Advanced decline ratio quite strong.
All right, Vivek, thank you very much for that. So that's a comprehensive stock wrap out. Mayuresh and Shrikant are with us with what they'd like you to do and advice as far as markets go. Gentlemen, thanks very much. Mayuresh, thank you for staying on. Mayuresh, to your mind, does it look like a market which is waiting or wanting to go up? There is no real earnings support. Maybe that will come, but all other factors, right, are lining up in a positive way. Mostly, I mean, macro and we'll see how the latest escalation goes, but pretty much all other factors are lining up in a positive way. What's your sense?
So absolutely. I think what we are sensing in terms of our approach on the markets seem to be in a confirmed uptrend based on our ratings and rankings. And obviously, I think earnings were expected to disappoint in Q4, Prashant, and it has largely remained soft. But the belief here is that with the tax cuts announced in the budget, consumption should start getting a boost from this quarter itself. So from Q2, the expectation largely is that earnings should start bottoming out. And the scenario that is getting penciled in with better monsoons expected this time round, rural consumption should also bounce back very, very smartly. Now, couple that up with government capex continuing at a fast pace, the liquidity that RBI is providing. And therefore, I think expectations of private capex coming back at some point of time, even with the interest rate cut scenario not getting accounted for in the second half, would largely mean that both the macro and the micro picture look very, very strong and steady for India in the global context of tariffs, in the global context of inflation, in the global context of the rate cycle might move. The only risk factors that we see, a couple of them. One, I think the 90-day window that Trump has announced. What comes out of that at the end of the next 45, 60 days with negotiations happening with China, outside China as well. And second, I think the inflationary roadmap across the globe, where you're seeing some element of sticky inflation coming through, which pushes the interest rate cycle globally and differs it by a quarter or two. I think those are the only two risk factors. Outside that, I think India probably seems to have a steady path. We probably remain positive on it.
Right. Thanks for that view, Mayuresh, coming in on the markets. But talking a bit more stock specific, and among the top sectoral gainer today was Nifty Auto. In that, Tata Motors was leading the gain. Why was it in focus today? This came in after India and United Kingdom signed a free trade agreement which will reduce significantly tariffs on automobiles. Shareholders of the company have also approved the demerger of the company's commercial vehicle business. Sudarshan is here to tell us more on this front. Sudarshan?
So after a long time, we saw Tata Motors gaining in trade, and today it was higher as much as 5%. So the back of two announcements that company has seen. First, India, UK have finalized the FTA. Now, under the deal, import duty on automobiles is going to reduce to 10% from 100%, and it's going to benefit JLR, which forms 70% of Tata Motors' consolidated revenue. And analysts believe that JLR has already been facing issues in markets like US and China. Now, considering the reduction in import duty, and it would make easier for JLR imports in Indian market, and the sale will also increase considering the duty reduction, and that might offset certain negatives that are coming from markets of US and China. And the second announcement was related to demerger approval that company has received from shareholder. It's almost 100% approval that company has got. Now, under that process, if a shareholder is having one share of Tata Motors, he or she will receive one share of CV business as well. Now, apart from these announcements, what do brokerages feel? So, total 34 brokerages, as per Bloomberg data, have the coverage on stock, and of that, 20 have the buy call and 6 have a sell call. Now, those who have buy call, amongst those, the target is as high as 1,300, and for them who have a sell call, the target is as low as 600 per share. So going forward, we'll have to see how this India-UK FTA deal plays out and if it really benefits Tata Motors.
Thank you very much for that. So Tata Motors up 5, biggest Nifty gainer today. Srikanth is also with us. Srikanth, a quick view on markets, and then if you can weigh in on Tata Motors.
Yeah. Good evening, Prashant and everyone. I think, the markets are very clearly we can see that the market is in time-based corrective mode. It took just 10 days to climb 2,500 points from the levels of 21,750. However, since then, if we see the overall trend of the market, then the market has spent equal amount of time, nearly 9 days, within the range of 24,500 and 24,200. So it is very clear that the market is in time-based correction, and such type of patterns usually turns into continuation pattern and follow the previous trend. So previous trend was like rally from lower levels. So we can expect furthermore bullishness in the market. But for that, we need whether the market is crossing 24,500 or not. So the final strategy should be to look for creating long positions even at current levels, but with a stop loss at 24,200 on a closing basis. So I'm expecting market to move towards 25,000, but for that, we need to keep a stop loss at 24,200. If we go through with the technical pattern of Tata Motors, then after a very long time, the stock is absorbing selling pressure and it is forming some higher top, higher bottom series. And whenever we see such type of recovery from the deepest lower levels, most of the time stock tries to hit the 200-day simple moving average or median averages. So based on it, I'm expecting Tata Motors is moving towards the levels of 800 in next maybe a few weeks or few months. So it will take some time, but gradually it is heading higher.
Okay, gradually it is heading higher. That's the word coming in on Tata Motors. But let's move on, talk about a couple of other names where BSE versus NSE is what we talk about, because the two largest stock exchanges, Bombay Stock Exchange as well as NSE, both have reported their fourth quarter numbers, with BSE actually outperforming in terms of Q4 versus NSE. Vamakshi is joining with us to give us a comparison in terms of their numbers. Tell us why and what led to the outperformance for BSE as well. Vamakshi.
Well, Vinny, strong set coming in from the BSE, but on the flip side, when you look at NSE, the numbers were rather weak for the quarter gone by. BSE reported a growth of almost 10% sequentially in their revenue. This came in much higher than what the street was penciling in, and this growth is largely coming in from their transaction charges, which saw an uptick of almost 20%, and other operating income, which was up nearly 12%. As far as the EBITDA margins is concerned, that also expanded by almost 58 basis points sequentially, coming in at 57.2%, but nevertheless, it is a miss as far as street expectations are concerned. Now, this time around, the company had an SGF reversal of around 109 crores as compared to an SGF contribution of 199 crores in the previous quarter. Resultantly, when you look at the net profit, it has seen a very sharp uptick, 125% higher on a quarter-on-quarter basis. So overall, when you look at the numbers, very strong set. Let's also look at the operational metrics. Average daily notional turnover for BSE saw a downtick of 35%, while on the flip side, the premium turnover saw an uptick of 35%, so that bodes well for BSE. In addition to that, they managed to also gain market share in the equity options segment. That is a big positive for BSE. In fact, what Motilal Oswal also earlier highlighted was that because of the F&O regulations, BSE has benefited from a rise in the non-expiry rate trading activity. Now, let's also put the valuation for you. For BSE, the EPS is at 96. Of course, when you adjust for the SGF reversal, the EPS is much lower, and as far when you consider the EPS of 97 odd rupees, the stock is trading at a PE of almost 65 times. In comparison to that, NSE, basis the unlisted price that is available, is trading at a PE of nearly 32.5 times.
Okay, all right, Vamakshi, thank you very much for that. Stocks at 66.50 as of today's close. Mayuresh, any thoughts here?
Again, Prashant, I think BSE is getting the premium because it's listed. NSE is not listed. I think that's point one. Second, I think in terms of the option activity, the expiry that BSE is conducting, you've seen significant market share gains, and one expiry per exchange is obviously helping BSE to a large extent. Again, I think out of the streams of revenue that they generate, the annuity-based revenues seem to be pretty strong, expected to remain strong over the next few quarters, next few years, as equity investment still picks up quite significantly across the length and breadth of this country. And therefore, I think from a numbers perspective, it should keep on coming on to the balance sheet. Obviously, valuations that Pamachi was pointing out are a tad bit expensive at this juncture. Again, NSE is a market leader as far as cash trades are concerned. Again, in terms of their expiry, it is one of the leaders in terms of options and futures market as well. And therefore, I think from a valuation perspective, NSE looks attractive. But I think for both the exchanges, volumes will keep on continuing to grow at a decent pace, and so will numbers. So at this juncture, since BSE is listed, anybody holding can continue holding, but not adding because valuations probably are expensive.
Absolutely. Valuations are very expensive as of now.
And with BSE, Vinny, the other thing is, I think this has been pointed out by many analysts. There's something called a settlement guarantee fund, towards which exchanges have to contribute. So if you adjust for that SGF amount, which, I mean, BSE has to at some point bring in, the EPS drops to 70. And then the PE actually is an actual normalized PE is about 90 plus.
So that's very, very high.
Yeah. So you have to, I mean, you can adjust for it based on this. Yeah.
So absolutely keep an eye out on that point as well. But let's move on and talk about the pharma space. Now, US Drug Regulator has said that it is planning to expand unannounced foreign inspections. Ekta Batra is joining in with us to give us details on this front. Ekta, take us through the details, what this actually means for pharma companies as well.
Well, it is something which was largely expected. The US pharma companies were in fact expecting this kind of trend to take place, but now it's become more official. So the US FDA has indicated that they will be expanding unannounced foreign inspections. This is building on a pilot program that they had conducted in India as well as China. The aim is to ensure foreign companies receive the same level of regulatory oversight as domestic companies. And the US firms, remember, already face surprise checks. Foreign sites, for example, according to them, show more violations despite advance warnings of inspections. Investigators are now going to be very objective. For example, they're going to refuse any kind of industry-paid travel. Overall, to put it into perspective, 12,000 domestic inspections every year by the US FDA and 3,000 foreign inspections in more than 90 countries every year. Surprise checks, according to them, will now help them catch bad actors who falsify records and conceal violations. So investigations are definitely going to be tougher. The larger generic companies have been dealing with surprise inspections for a long period of time. Yes, maybe there could be an element of toughness involved now, but they are used to it. It could probably impact the smaller companies which have smaller operations dealing with the US. That's probably where regulatory concerns would crop up more.
Ekta, thank you very much for that. I mean, getting a little serious, right, with regards to the US FDA saying, more inspections, unannounced, costlier, etc., etc. Mayuresh, pharma is a space. I mean, this is not even about reciprocity in terms of tariffs. This is onshoring pharma as a national security priority. That's what they want to do. Although, as we well know, it's very costly to make in the US. So how far can they take this? We don't know. But any thoughts on stocks?
No, so from a portfolio perspective, we continue holding stocks like a Sun and a Cipla in our global portfolios, Prashant. And you're absolutely right. I think if you probably hear the Ali Lila management a few weeks back, I think he's given the perfect argument in terms of how cost and time overruns might probably happen if drugs start getting manufactured in the US. No two ways about it. I think FDA inspections is a part and parcel of what Indian pharma companies have to go through. And they've followed a very stringent process now because of what you've probably seen in the past. A lot of pharma companies, plants have got affected, resolutions take time. And therefore, there have been a lot of proactive measures on the ground checks that we've done, management conversations that we had, in terms of ensuring that at any point of time, the process requirements are fulfilled to the FDA's requirement as well. And therefore, I think my own sense is that the kind of specialty pipeline, a lot of these leadership stocks have created, phase 2, phase 3 trials, a lot of these drugs are going through and expected to probably get introduced over the next few months, next few quarters, will give a huge pipeline and also an alternative to the existing drugs in the portfolio that they've got. So I think Sun, Cipla is something that we continue holding, albeit I think keeping a watch on what developments happen from a macro perspective for this sector.
Okay, Mayuresh, thank you so much for that view. But thank you so much, Mayuresh, as well as Srikanth, both of you all for joining in with us on the show as always and helping us understand in terms of specific stocks as well as the market move. But on that note, we're going to slip into a very short break, but we'll leave you with key commentary we got through the day from market experts. Stay tuned in. We'll be back with the corporate action on the other side.
We all expect it to be a measured and a calibrated strike. And over the last decade, we had two instances in a smaller manner like this. One was the Uri and the other was the Pulwama, and market took it its own stride. But the larger one was in 1999, if you remember, May to July. Market saw a 10% drawdown, but eventually we outperformed MSCI. The MSCI India outperformed by 30%.
Clearly, the geopolitical risk is behind us. The uncertainties probably come to an end, though there still continue to be a few developments going forward, as there will be retaliation as well, or there could be retaliation as well. But clearly, from a market standpoint of view, the uncertainty is behind us.
Well, I think we have to wait and watch. Clearly, the ball is in Pakistan's court, whether they choose to escalate and retaliate and how far they go, because the risk is tit for tat escalating. The opportunity is that if Pakistan does something token, because they'll have to do something to save face, is my guess. And if they do something token and call it a day, then maybe things can calm down. So, the markets are obviously have been on tenterhooks the last few days. Today, it looks like the markets are hoping that whatever was expected has happened and it's not going to get worse.
Welcome back to Markets Forward on CNBC TV18. Now we go across to the top corporate voices. And firstly, we had Polymedicure. The company has guided for domestic growth in the range of 25 to 30%, with margins expected to remain around 25%. It also projects overall revenue growth of over 20% in FY26 and expects export to grow between 15 to 18%. Now, despite the positive outlook, the stock was down in today's trading session. Next up, we also had Newton Software. The management of the company joined in with us. They spoke about and have maintained its growth rate, run rate of 20% in Q4. The company's order book, that grew by 17% on a year-on-year basis, and it secured around 62 new customer deals as well. The management believes the US market will be the primary driver for the future growth of the company.
Okay, we had the management of JBM Auto with us, who essentially told us that the company aims to achieve revenues in the range of between 6,000 to 6,500 crore rupees in FY26. They believe the India-UK FTA will unlock new opportunities, and they expect exports to contribute to 10% of total revenue. It's about 5% right now. The company is also anticipating healthy growth in its OEM business this financial year. We also had the management of DCM Shriram join in. So they told us that the company, DCM Shriram, is expecting a 10 to 15% revenue growth in FY26. The chemicals business, which currently contributes 25% of the top line, is expected to be a key driver of bottom line growth going forward. Ongoing cost initiatives should also help in improving margins.
And before we wind down this edition of Market Forwards, let's go across to Vamakshi, who's here to tell us what are the important events to watch out for in tomorrow's trading session. Vamakshi.
Well, Vinny, it's expiry day tomorrow, so lots to watch out for. But, we'll be keeping an eye out on a lot of earnings tomorrow. A lot of nifty companies reporting their numbers. And we do have some heavyweights as well. Asian Paints, Bharat Forge, Biocon, Britannia, Escorts Kubota, L&T, as well as Titan. All of these counters will be reporting their numbers tomorrow, so keep a close eye on that. But apart from that, Gravita India and Oracle Financial Services will also be in focus. These two stocks go ex-dividend tomorrow. As far as some broader economic cues are concerned, later this evening we'll be hearing from the Fed on their interest rate decision. Largely the expectation is that they will leave the interest rate unchanged, but we'll have to keep an eye out on this development. Tomorrow we'll be keeping an eye out on Bank of England's interest rate decision, as well as the US initial jobless claims data that comes through. And lastly, it is very, very important to watch out for the India-Pakistan standoff if there are any sort of developments on this front.
All right, Vamakshi, thank you very much for that. That's the most important bit. We woke up this morning to news flow of India striking across the border. And I think that is very much going to be on the radar in terms of how this really moves forward. Well, it's a wrap on this edition of Markets Forward from all of us here. Goodbye. Thank you very much for staying with us. News and updates follow on the other side.